let's talk about what you need to know about property taxes in Texas. So this is going to be the first video. There'll be more to follow because I tried doing this once before and it got to be really long and somewhat convoluted. So what you need to know about property taxes in Texas is this. Property taxes in Texas are different than other states, and that's okay. It's not good or bad, it's just different. But property taxes are, real estate, people that own real estate, both, residential and commercial, we do pay property taxes. Now, there's exemptions. If disability, for example, somebody with disability may be exempt from paying taxes. We'll put exemptions. There's a link somewhere around here for the homestead exemption over 65, disability person. We'll put all that link in a separate place, but that's not what we're talking about here. Here, we're just kind of going over fundamentally what you need to know about property taxes. In Texas, for homes, right, and just in general, property taxes are due typically around mid-October. They're not considered late until after January. So people are like, well, I don't pay my property taxes aren't due until December. Not accurate. So when the property taxes post, meaning like they come out and the taxing authorities say properties are due, they're due in October, but you have until January 31st to pay them. But they're technically due once property taxes post. So in Texas, the tax rates, generically speaking, depends on where you are and what you're doing, but I use for North Texas here in Dallas-Fort Worth, I use a 2.3% tax rate. So taxes can be expensive because if you got friends in other states that say have a lower tax rate, then maybe because they have a state income tax, whereas Texas does not. So for that reason, that extra revenue from our state comes through property taxes. So property taxes are great in the sense that they are at least tax deductible up to a certain dollar amount. The Tax Act changed that many years ago during President Trump's first term. But now you're limited to like 10 grand that you can write off. So if your property taxes are more than that, is what it is. So thanks for playing. If you pay 12 grand of annual property taxes, you're not going to get the full tax deduction. You get at least up to that 10 grand. I would certainly love to see that change, but it is what it is. So they are tax deductible. Check with your CPA, make sure you're doing it right, all that fun stuff. As far as how to calculate them or who governs this or how to figure that out, there are what's called CADs, Central Appraisal Districts. So like, for example, you can go to DCAD, that's Dallas CAD. You could look at, let's take Austin, go to Travis CAD. So if you just Google CAD, CAD, stands for Central Appraisal District, you'll then come up to a website. And then, whether it's Collin CAD, Tarrant County, TAD, I think is what they call it. When you go to their websites, you can then look up properties based on people's names, which is kind of violating to some degree, right? But you can look up, people's names and see where they live and how much the appraisal district is valuing their house. So kind of weird, but the appraisal districts set the value that then determine how much you pay in property taxes. So there's two ways to control property taxes. One is you can contest, and we're not going to go deep into it, but you can contest your property values with the appraisal districts once a year. So you can go in and try to lower that value, and you do because it saves you money in terms of paying taxes. Another way is you can vote. So the tax rate's set by a variety of factors, but it's how city, school, hospitals, it's how all these things, city, school, county, hospitals, maybe mud districts like PIDs, things like that are kind of, if you're on the outskirts of town. So there's a variety of taxing authorities that make up that 2.3% in my example. So you can vote whether or not you want to pass certain ordinances and raise or lower, city expenses. But those are the only two ways to control your property taxes is lower the value or hopefully lower the tax rate. So the tax rate's calculated by taking the home's value as assessed by the Central Appraisal District by CAD. So if they say a home is worth 400 grand and your tax rate, let's use round numbers. Let's say a tax rate is 2%. That means 2% times the 400 grand value gives it 8 grand annual tax bill. So that's how you calculate what's due. Now, again, with certain exemptions over 65, if homestead, disabled person, like I said, those things could hopefully maybe lower that amount that you pay, but that's at least what it does, or that's how to calculate it. The tax rates, as I mentioned, I use 2.3 for North Texas. We'll make separate videos and instructions about what it means. Like when you buy a home, how are taxes calculated? When you refinance, when to pay them and how to pay them. We'll go through all that, and then we'll talk about some exemptions as well. But if you have questions, the Mortgage Mark team is, we are always here to help. So feel free to reach out to us if you have any questions about your property taxes. But what you need to know about property taxes in Texas, this is a good overview. We will certainly give you more information moving forward about all those other things we talked about. And just remember this: when you think mortgage, think Mark.